Tired of losing money due to chaotic market movements? Most traders blow their deposit for one simple reason. They don't know how to properly work with market gaps and volatility breakouts. But here is the secret. If you learn to spot these movements correctly and view them as opportunities, not risks, your results can change forever. In this video, I will show you how to avoid the common mistakes that lose newbies money and how to trade gaps and breakouts correctly. If you want to start earning instead of losing, stay with me. This will be your first step towards stable success with this strategy. What is a price gap? A price gap is when the price of an asset opens significantly higher or lower than the previous close. These gaps often occur due to important news or events that happen outside trading hours, such as gap up, the price opens higher than the previous close. Gap down, the price opens lower than the previous close. These gaps provide unique opportunities for traders, but they require a deep understanding and a clear strategy. Fundamental news. Positive news such as a strong company report can cause a gap up. Negative news like an unexpected earnings miss can cause a gap down. Emotional or speculative factors. Gaps can happen due to exaggerated news or rumors. For example, if traders expect big changes without solid fundamental reasons. Irrational market behavior. Gaps often result from an exaggerated reaction from investors, which can later lead to a gap fill. Gap fill is when the price returns to the level it was at before the gap. In the case of a gap up, the price drops back to the previous level. In the case of a gap down, the price rises back to a higher level. Why does this happen? This occurs because of price correction when the market comes back to a rational balance. If the gap was caused by an exaggerated emotional reaction, the market eventually corrects itself. If the gap was based on false news or speculations, the price quickly returns to the fair level. Gap width. The larger the gap, the more likely the price will return due to overbought or oversold conditions. Larger gaps generally create better opportunities for gap-filling trades. Gaps at key levels. If a gap occurs at support or resistance levels, it increases the chances of a trend reversal. For example, a gap up to a resistance zone often results in a pullback, trend confirmation. When entering a trade, it's always important to wait for confirmation of a trend change, such as breakouts of a trend line on the formation of a pattern on a lower time frame. Imagine a company releases an Excel financial report and the price opens with a gap up. If the rise is due to real fundamental factors, the price will likely stay at the new level or continue rising. However, if the reason is speculative, the gap is likely to fill. Gap down. A company is negatively reviewed in the median and its stock opens lower. If this is just a rumor, the price will likely return to the previous level. In the next part, we will move to practice and try to figure out how price behaves on the chart with gaps during liquidity breakouts. Let's take a look at an example from the Chicago CME chart. Since the exchange is closed on weekends, if the price changes on other exchanges during that time, a gap forms when the market opens. Such gaps often act like price magnets. Looking at history, we can see that in 3 out of 3 cases, the price returned to and filled those gaps. Bitcoin recently made an all-time high and left a gap, and it's only a matter of time before the price comes back to fill it. Gaps can also form during sessions on smaller time frames. For example, let's take a look at the Euro-USD chart. These gaps are less dramatic than those on larger time frames, but they can still provide valuable insights for traders. They often occur due to liquidity and market participant activity. Here are some reasons for small gaps on lower time frames. Low impact news or events. Small gaps can appear due to local economic news, such as the release of moderate PMI data for the Eurozone, which may cause a quick change in price on the Euro-USD chart. Low liquidity. During low liquidity periods, for example before market close or at the start of trading session, small gaps can appear due to uneven order distribution in the market. For instance, during the transition from the Asian to the European session, reaction to local orders. When large market participants, banks or funds execute significant orders, it can cause a short-term price change, showing up as a gap on the chart. Looking for the ultimate edge in the markets? Join our Telegram channel for exclusive trading signals, expert insights, and strategies tailored just for you. From precise trade entries to actionable tips, everything you need to succeed is delivered straight to your inbox. Click the link below and start optimizing your trades now. Now let's talk about volatility breakouts. Ever entered a trade after a breakout only to see it reverse and lose money? Learn to avoid fake breakouts and profit from real moves. Breakouts happen when price crosses key support or resistance levels. While they can lead to big moves, most are faked 80% of the time. Here is how to spot real breakouts. Watch levels. Focus on support, resistance, manipulations, and sweeps instead of memorizing patterns. Wait for confirmation. Look for impulse candles, large or medium, after a breakout to confirm it's genuine. Set stops and profits. Place a stop loss just below above the breakout. Aim for a 1-to-3 risk-reward ratio, taking partial profits and moving your stop to break even as the trade moves in your favor. Don't always wait for pullbacks. Some breakouts happen without them. Be prepared to act. If you want to trade breakouts, remember, don't chase the price immediately after a breakout. Wait for confirmation through an impulse candle. Place your stop loss and take profit wisely. And most importantly, don't wait for every pullback. You may miss a big market move. Use this strategy as a supplement to your main one to minimize risk and improve your trading efficiency. By the way, if you haven't already, make sure to check out our Telegram channel for even more insights. Don't forget to subscribe to the channel, like this video, and turn on notifications so you never miss essential trading tips. Ready to keep learning? Watch the next video and take your trading to the next level.